The government shutdown. Will this impact home sales in the Phoenix area or the real estate market altogether? We're going to talk about that today and what is going on there. Plus, Phoenix has made the list as one of the top 7 housing markets where home prices are falling the fastest. We're going to take a look at that today, so let's get into it. Thanks for joining me this week, you guys. As you know, or maybe don't know, but there is a current government shutdown, at least at the time of me recording this video, and it will impact the real estate market a little bit. How much will this trickle into the Phoenix housing market? Well, it really depends on the length of this shutdown. Housing market faces major risks from government shutdown. Industry groups say the stakes are especially high with market volatility and mortgage rate pressure. We're also going to talk about mortgage rates in just a moment. So one of the major things is that the government shutdown has suspended the National Flood Insurance Program without the authority to issue new policies. And the reason this is an issue is that this could derail potentially 1,400 home sales every single day. Now, this is for homes that are in flood-prone areas, but the longer this goes on, the more home sales will actually be affected because we're obviously putting more and more homes under contract as the days go on. And this could essentially cancel these closings, delay these closings if this continues. Obviously, Arizona isn't one of those places that you think of as flood prone. However, we do have a number of homes in the Phoenix area that are in floodplains. So this is something that could affect our market here. They say that the National Flood Insurance Program actually supports 500,000 annual home sales, generating 1 million jobs and $70 billion for the U.S. economy. So even a short lapse in this is going to create a ripple effect through title, lending, and just closing on homes in general. So other than just flood insurance, USDA's rural housing loans, those are suspended currently. The IRS, depending on its contingency staffing, could halt tax transcript processing, which is a key requirement for mortgage applications. There could be a slowdown in FHA approvals and servicing, and Department of Veterans Affairs, of course, is a big one as well. So VA loans could be affected as well. Now, obviously, if this is short-lived, it's probably not going to make a major impact, but if it does continue on, the housing market is not really in the strongest position right now for buyers to feel like they want to take risks or sellers to feel like, they don't care how long their escrow period is dragged out for. So this could really start to affect the market the longer it goes on if people don't have that comfort of getting into the market or continuing on with the transaction that they currently have because it's halted for reasons that they can't control. Now, speaking of sellers who are not interested in continuing on with these long transactions that might be paused, sellers are also cutting prices at a record rate, according to Redfin, in order to lure skittish buyers. They say that the typical home in August went for nearly 4% under its asking price, which is the steepest discount for that month since 2019. 1 in every 6 U.S. home sellers, which is about 16.7%, dropped their asking price in August, which is up from 15.9% a year earlier. So, of course, this is national, but I wanted to see what's going on in Phoenix as it relates to the percentage under list price that homes are selling for in August. So they're saying typically it was about 4% in the US. When we look at Phoenix for August, this sale price to list price ratio is 97%, meaning that homes sold about 3% below the listing price on average here in the Phoenix area. So we're a little bit less than what they're seeing nationally, according to Redfin. But also wanted to look at the number of price drops because they mention how those price cuts have increased. And what we're seeing here is interesting, like week to week. Again, this is a little bit volatile, but we saw kind of a low number at the end of August in terms of price cuts on a weekly basis. And then it's since been increasing throughout September to where we're at today, to almost 3,000 price cuts in the last recorded week that we have here. This is the end of September. So we'll have to see if this continues. My guess is that it will, because I just don't think that the market is going to continue to be moving quickly and have a whole lot of demand, to be honest. And so I do think sellers are going to continue their price adjustments, their price cuts. I think this is going to remain elevated, possibly even increase as we get further into the fall months. Now let's talk about what's going on with mortgage rates, because the government shutdown is also affecting mortgage rates as well, mostly because it's affecting the overall economy and the market, right? So last week we were anticipating getting jobs reports, and that did not happen because of the government shutdown. And when we don't get that information, that's one of the main things that the Fed is looking at and relying on to determine how they are going to move forward with the federal funds rate. So the bond market has kind of reacted to this, which has nudged mortgage rates down just ever so slightly. Today we're sitting at about 6.34. You can see there's been a small dip there through last week, but we can expect that we'll probably see a little bit more movement in rates the longer that the government shutdown continues. And when I say movement, they're anticipating that it could be a little bit more favorable for buyers. So keep an eye on that if you are a buyer, because you might see rates move in the right direction for you. Now keep in mind that there are options to find an assumable mortgage as well. And so in this situation, you can find a home that is listed on the market where the seller has an assumable mortgage. You can assume that at hopefully a lower rate than today's rate. If you're interested in looking for properties with those types of assumable mortgages, check the description below. I have a link for a list there. So let's take a look at this list where Phoenix is on the list of 7 housing markets that are seeing home prices fall the fastest. Before we get there, if any of this is helpful for you, consider subscribing and joining our community moving forward. I am here every Wednesday with a market update. 7 U.S. housing markets that are seeing home prices fall the fastest. This is according to Business Insider. As we go through this list, it's not surprising that there are a number in California, San Diego, Carlsbad area, Miami, not surprising as well. LA, Austin, all the usual suspects, San Jose, and then we get to Phoenix here. Median list price $499, year over year change in list price down 4%. Now, keep in mind, they are talking about list prices, not sales prices in this article. 2 different things. Obviously, the list price, as those go down, the sales prices are going down as well, but they are a different metric to take a look at. So I was looking at what we are seeing here in Phoenix, kind of comparing this Business Insider article to what I can see from our data on list prices in the Phoenix metro area. And the Cromford report tracks this as list price per square foot. I would assume that they're probably looking at it at the median list price, because that's what they're referencing here. So a little bit of a different way of looking at it, which could attribute to the difference in percentage. But if we look at year over year change, where we're at today, $340 per square foot for the list price, the average list price of active listings. So before they're actually under contract or even, sold. And then if we look to October of 2024, we were at about $345 a square foot. So overall, the change is only about 1.4% that I can see for our average dollar per square foot list prices year over year. Again, they're measuring it based on the median list price, so it could be a little bit different. But from what I can see, we're about 1.4% below where we were at last month or last year during the same month. Now, if you're interested in the average dollar per square foot of the list price in your city, check the description below to request that information. This article just came out, so I'm assuming that they're measuring, October, maybe September year over year, but they don't really mention that specifically. So just to give you an idea of what we're seeing in our data, it's a little bit less than what Business Insider is reporting. However, we're definitely seeing a decrease in the average list price, which means we're also seeing a decrease in those sales prices more than likely, or at least a little bit of a softening. Now, we've seen a lot of kind of changes throughout this year, right? We started the year with a lot of active inventory increasing. We saw a less busy spring than was anticipated, and then got into the summer, which was a little bit of a slowdown, and we're still at kind of this turning point where we saw rates go down. Truthfully, we haven't seen a whole lot of activity in the market from that, to be honest, and trying to figure out what fall is going to look like. But one segment of the market that has continued to move forward pretty consistently is luxury. And according to Yahoo Finance, $1 million homes are the fastest moving part of the housing market as wealth gap grows. And this is true for the Phoenix metro area for sure. Obviously, they're reporting nationally, but we are definitely seeing luxury come out quite strong in our market here. They say sales of top priced houses are up 8.4% from a year ago, while the rest of the market remains sluggish. Now, they're talking about sales rates. I want to look at what is happening in our market as it relates to the luxury homes as well. And the Cromford report just came out with some information about that. They're saying that there were 6 closed sales of homes over 10 million in September, following 0 in August and 1 in July. So we've seen a pickup in, luxury. That is definitely luxury over 10 million. The average price per square foot for these 6 homes was $13.89 a square foot. That is just so funny to hear, because typically when you hear dollar per square foot, it's in the low hundreds, 200s, 300s, but $13.89 a square foot, that is what we're talking about when we're over $10 million. We can't compare this price with a year ago because there were no closed sales over 10 million in September of 2024. So obviously we're already seeing more movement in that segment this year as compared to last year. So they say obviously the market over 10 million is rarefied and small, and the numbers jump about wildly from one month to the next. But if we look at the market for homes listed over 2 million, you get a slightly less volatile situation. In September, there were 4,563 closed listings below 2 million and 116 that closed at or above 2 million. Now, those homes under 2 million sold about 0.6% below the average price per square foot of last year. The homes over 2 million sold for an average of $729 a square foot, which is up 7.2% from September of 2024. So obviously a really big difference when you hit that 2 million mark, that homes over 2 million are selling for higher prices by 7% than they were last year at this time. They call out that we're currently reporting positive appreciation for the overall market, but without the luxury market, that appreciation turns negative. So it's important to understand that we do have a segment of our market that is in this luxury section that is doing really well, which is totally separate than what we're seeing in kind of more of the majority of the market, especially under 2 million. Obviously, that is affecting the average prices and median prices that we're seeing in the market if we don't remove some of that strength from luxury. All right, let's take a look at the CMI and what's going on here. We're at 80.4, so still in a buyer's market across Phoenix. Our supply is just under normal at 99.3, and demand is still a little bit further below normal at about 21% below normal, 79.8%. Both of these numbers kind of moving a little bit closer to each other every single week, but just very, very slightly. When we look at the major cities throughout the valley, we can see that we're getting a little bit more of a mix of red and green arrows. The overall change month to month was 0.4% this week, which is down from 3.1% last week, and the week prior we had 5.9%. So we're definitely seeing that number decrease as the weeks have gone on, meaning that sellers are losing some of the strength that they had. Things are kind of shifting again a little bit back towards buyers, but obviously each city is different, right? So Fountain Hills at 154.2 technically is a seller's market, anything over 110. So it's fairly strong. It's definitely up in a seller's market. Same with Paradise Valley, Scottsdale. You get to Chandler, Gilbert, Avondale, Cave Creek. All of those are a little bit more on the cusp of that seller's market. And then we have a number of cities that are balanced markets. And on the buyer's market, we've got Maricopa, Buckeye, Queen Creek, Surprise, Goodyear, and Tempe just on the cusp there, trying to get back into a balanced market. So it really varies throughout the valley on what we're seeing. A lot of that depends on the inventory levels in those cities. It also depends on how much new construction could be going on in those areas as well. But overall, we're seeing this change where there's a little bit more softening coming back into the market. We are not seeing as much strength moving towards a seller's market. Rather, we're, seeing some of that fade and going back towards a balanced or buyer's market. Now, if you're considering buying or selling a home in this market, you can always chat with our team for a discovery call and just figure out what those next steps could look like for you. Of course, no obligation, just getting some information on what that could look like in that process, especially given the market conditions today. And don't forget to check out those assumable loans below. I will see you guys next week on my next market update.